Okay. Hello, everybody. Very good afternoon to you all. I hope all are settled. Very happy International Women's Day to all the women out there who are presenting, who are not presenting. And thank you, Punitji, for giving me this opportunity. This would be marked as my ALD debut. So if something goes wrong, please bear with me. I'll try to give my thesis about a company, which you will come to know further in the presentation. Okay, let's deep dive into the presentation, which company I want to present. Am I audible?
Yes, go ahead.
Yeah, sure. So today I'm going to present a company named Titagarh Rail Systems Limited. So this is not just a rail systems company. This is an engineering mobility which is having its presence across land as well as water. So as you can see, the price today is around 671 rupees and the market cap is around 9,000 crore rupees. So this is a price which is actually a very low compared to its all-time high price. And what are the reasons why the price has gone low? We'll come to know during this presentation. So let's dive into the presentation. So as per Titagarh's vision, they aspire to become India's first global leader in rail mobility by building a sustainable growth model, optimizing the value chain through backward integration and driving expansion through the strategic alliance and partnerships. And their mission is to build a system driven, result focused organization that leverages technology and automation to achieve global reach and visibility, aiming to become a $10 billion company. So basically, Titagarh is a comprehensive mobility solution provider which is present in railway sector, but it is not limited to that sector only. At Titagarh, they are specialized in crafting cutting-edge transportation solutions, including semi-high-speed trains, urban metros, passenger coaches, propulsion equipments, and a wide array of wagons, including specialized ones. And one of the factors which is not added over here is a submarine factor. So you will get to know about that later on. Now, as you can see on the slide, that this is the journey of Titagarh rail system. So earlier when it was established, it was named as Titagarh Wagons because that was the main business of the company. But later on, they started venturing into different verticals. And right now, the company is named as Titagarh Rail Systems. So, as I already told you, the year of establishment was around 1997. Sorry, and they have 4 manufacturing facilities which are spread all across India. And as per their claim, they are the only Indian company which are manufacturing both wagons and coaches. There are peers, but they are only into wagons. This is the only company they are which is catering to wagons and coaches market. And as per their claim, they are having market share around 25% in only wagon manufacturing. So as you can see, the journey from 1997 till 2025, wherein there are there were different years where significant products were delivered to different sectors. Like Pune Metro was delivered, Bangalore Metro was delivered. There was EMU and MEMU introduction in the Indian Railways. So there are different factors that has been happened over the years throughout the journey of Titagarh rail systems. So, as I already told you, there are 4 manufacturing facilities of Titagarh. Out of those, few are freight rail manufacturing systems and few are passenger rail system manufacturing facility. Freight is related to transportation of goods, passenger is related to transportation of people. And engineering center is basically the brain of this company, you can say like that, because all the engineering part happens over in those sectors like in Hyderabad and Bangalore. And finally, they have added a new facility, that is wheel manufacturing facility, which is their JV with RKFL, that is Ramakrishna, the RKFL. And these are the board of the directors, where Mr. JP Chowdhury is a visionary leader who transformed the company from a wagons company to a complete rail system solutions company. He is a visionary leader who transformed the company from humble beginnings into a major Indian manufacturer of railway rolling stock. including passenger coaches, metro trains, and wagons with a significant global presence. Now we will see what are the business segment of Titagarh. So as you can see, there are four business segment if you look at it. So the first one is freight rail system, which covers open wagons, bogies, covered wagons, specialized wagons, bulk cargo, industrial transportation solutions. So as you can see, there are different pictures. Over here, you can see wagons, bogies, couplers, loco shells. So initial capacity of the company was around just 50 wagons per year. Mark here, per year. Now Titagarh has grown to such an extent that they can manufacture around 12,000 wagons annually. That means around 1,000 wagons per year. This is just related to wagons I'm talking. So about coaches we'll be talking later on. This is backed by a melting capacity of 30,000 metric tons per year. Today, it holds the largest share of India's wagon manufacturing market, playing a vital role in strengthening the nation's freight infrastructure. And their goal is to achieve 3,000 million tons of freight loading by 2027. This is actually backed by India's vision about the railways as well, railways freight system as well. The next one is passenger rail and metro, wherein they are manufacturing metro coaches, the EMU and MEMU coaches that are electrical multiple unit and mono electric multiple unit. So these are shorter and long distance trains, but which are powered by electricity. The next one is urban rolling stock. Now they are also into shipbuilding. So recently they have started venturing into this field because India is giving a lot of boost to the submarine sector. They want to increase their, they want to improve their capacity to guard the country against all the odds in the coastal area. So in the shipbuilding, they are basically manufacturing coastal research vessel. About this, they have got a contract as well from the government of India. Then they're manufacturing naval vessels. They are manufacturing passenger ships, tugs, and inland vessels. The next one, the final component will be railway components. Under this, they are manufacturing forged wheels, HVAC systems, electrical and mechanical subsystems. So as we have already said, they are manufacturing passenger coaches, EMU, MEMUs, monorail, traction motors. So as per their claim, India first private manufacturer is Titagarh, which is of EMU and MEMU coaches, and they have delivered around 350 world-class units to Indian Railways since 2007. So along with all this product, they have recently ventured into along with this, they have recently ventured into manufacturing different components like driver desk, cubicle and cabinets. So cubicle and cabinets acts like a data center and power control room for the train. And Titagarh is one of the few companies having expertise in propulsion and electrical equipment, which include traction converters and power electronics, auxiliary power supply, traction motors, train control and monitoring system, and EMU up to G0A4 for metros. Here G0A4 is written. Actually, there are different stages of train. So G0A4 is fully manually operated. G0A2 is semi-manually operated. G0A3 will be automatic, but it will be supervised by a man presence. And G0A4 is fully automated. There is no driver to control the train. So they have reached till this stage. That means this is a remarkable achievement for them, because in abroad there are multiple trains which are run on this platform only, that is G0A4. There are no drivers to the train. So this is a good additional point. So they are ready to export the trains to the overseas market as well. Finally, they are trying to venture into defense sector, wherein they are manufacturing steel and modular bridges, Bailey bridges. They are also trying to go into the safety and signaling systems domain as well. So they are manufacturing train control system, condition monitoring, and vehicular and train mounted solutions are also a part of their manufacturing system. So here you can see there are two foundries that are under Titagarh systems, wherein the capacity is around 30,000 tons of casting. And Titagarh is a trusted name for freight rail components. So as you can see at Uttarpara and Hooghly district in West Bengal, there are two foundries of Titagarh. So they manufacture draft gear, side frames and bolsters, E-type coupler, and CMS crossings. Now, let us see what are the subsidiaries which are helping Titagarh to grow their presence in India as well as out of the India. So the first one is Titagarh Singapore Pte Limited, which is a wholly owned subsidiary by Titagarh. The location is in Singapore, and the purpose of this subsidiary is to expand Titagarh's global presence and the export operations. So basically, what they are trying to do is, instead of importing the components from outside, they are trying to build the components indigenously, and they want to export the components to the outer market. So basically, this factor is supported by the Titagarh Singapore, wherein the global presence is supported by Titagarh Singapore Pte Limited. So international marketing and exports is done by them. Overseas order coordination is done by them. Then the customer relationship management outside India and trade and logistics support for global rail projects is also done by the Titagarh Singapore Pte Limited. The second subsidiary is Titagarh Pharma Engineering Services, which is an Indian subsidiary of Titagarh. So what this does is, this provides engineering and design service to Titagarh, and it also provides technical support for metro and passenger coaches. This provides technology coordination between India and Italy operations, and it provides engineering backbone for metro and urban rolling stock business. The third subsidiary is Titagarh Naval Systems Private Limited. This is a wholly owned, newly formed subsidiary. Earlier, it was working under the Titagarh only, but now they have formed a different section, a different subsidiary for that. I mean, for the submarine and maritime systems. So they are manufacturing naval vessels, they are manufacturing coast guard vessels, they are manufacturing tugs, specialized defense ships, and coastal research vessels as well for the Indian government. And this handles the defense and shipbuilding verticals separately from the rail business. So as we have seen till now, there are multiple verticals where the Titagarh is operating right now. And the final subsidiary, that is Titagarh Pharma SPA, which is overseas subsidiary and associate of Italy. So what is the purpose of this subsidiary is, it brings advanced European rail technology to Titagarh. Now this has two advantages. First advantage is that it can bring the technology which is there in Europe to India, and also it can manufacture trains which are compatible to European market as well. So this will improve the Indian trail network, as well as it will improve the export of the company also. Now let us see what are the joint ventures that are formed by Titagarh. So the first joint venture, and which is very important, that is recently formed, is with Ramkrishna Forgings Limited, that is RKFL. The main business of this joint venture is to manufacture forged wheels, which are required for manufacturing the wagons as well as the coaches. So this is supplying wheels to Indian Railways, and they are supporting the Make in India initiative. Actually what happened recently was, the wheel set that is required for wagon manufacturing, there was a deficit about that, and that is why you can see the numbers of the company. We'll see this going on further. The numbers of the companies were not good because there was a short of wheels which was happened at the manufacturing facility. That is why the delivery of the product, that is delivery of wagons, what was not at par. So this is a good initiative that has taken by RKFL and Titagarh. Because of this, from 2027, just give me a minute. The shortage of wheels that was happened due to the incompatibility of the wheels provided by the different providers, that will not happen, and the company revenue will be at par. The next JV that has been formed is with BHEL, which is basically into manufacturing Vande Bharat train sets. As we all know, Vande Bharat trains are increasing in a great amount. They are running at a great speed, and they are improving India's rail network with a great height. So the next one, they are manufacturing electric propulsion systems, and they are doing electrical and traction integration. And this combines Titagarh's rolling stock expertise with base electrical technology. So this is a good combination which can give a good product for Titagarh. Now, the lastly, Amber Enterprises India Limited and Sidwal Refrigeration Industries has also done a JV with Titagarh, wherein they are manufacturing railway subsystems. They are manufacturing HVAC systems for coaches. They are manufacturing electrical and mechanical components, and they are also manufacturing lot of train parts which are required for metro and passenger trains. So with all these three JV, the revenue of the company is going to go at a very good number. This is the SWOT analysis. So till now we have seen that what are the strength of the company. So instead of going with just one vertical, they are diversifying their portfolio to freight, to metro, and to defense as well. So, and there is a strong JV ecosystem with BHEL, Ramkrishna Forgings, and other. And they have access to European technology via Firma, and they have an export arm in Singapore. So all of this are the strength of Titagarh Rail Systems Limited, which will definitely help them improve their revenue. What are the weaknesses? There is a high dependence on government contract. There is a high depend. There is This is a high capital intensive industry. There is execution risk in large metro project. What are the opportunities of this company for this company? There is a growing metro rail project in India. As we can see, every other metro city is is going through work of metro rails everywhere. So that means there is a huge opportunity for Titagarh to go into that segment. There is a defense and shipbuilding expansion because India is already venturing into that segment. Make in India push is already there. We all know of it. Then there is a localization of rail component because India want to do indigenization of each and every product that can happen in India only. What are the threats to this company? If there are some policy changes that happens, that will be a threat to this company. If the price of steel and raw material price changes, then that would create a price volatility. There is a competition from global rolling stock companies, but there is no one which is present there in India, which is a competition at different levels like freight, metro, and defense. There is Jupiter wagon, but that is only into wagons. Okay. Finally, there might be project delays which are impacting the cash flow. This is the revenue mix by different segments. The first one, you can see the major part of this revenue is freight rail system, which is around 55 to 60%, which is dominating the revenue stream. The mix is actually, however, shifting from freight rail system towards the shipbuilding, defense, and passenger rail and metro systems. This diversification, which is happening right now, is improving the earning and the stability and reducing the cyclicity of the business. Next, the defense vertical is expected to increase its share in future. The joint ventures which are formed are supporting the component revenue and margin improvement. As you can see, the freight is a major part which is giving stability to the revenue, but passenger and defense is providing the margin expansion where you can do more of the work and give and get more revenue. Next, these are the key global expansion and strategic initiatives that has been done by Titagarh. The first one is capacity enhancement, wherein the company is actually focusing on boosting the number of wagons that it is producing per month. So right now, they are producing around 1,000 wagons, but they are aiming for 3,000 wagons. That means 3 times the capacity they are targeting in the coming years. Next, shipbuilding diversification, wherein this is a new entity that is Titagarh Naval Systems Limited, is being established to handle the shipbuilding and maritime system business only. And this is aiming to expand beyond the existing capacity constraints for larger vessels. Till today, they have delivered around 35 vessels to different vendors in India only, and they want to improve this to around, I guess, 300 vessels in a year. Next is European presence. Titagarh has a European presence with the help of Titagarh Pharma SPA, which is working to leverage the international growth. The strategic partnership they have done with ABB for driverless metro propulsion system are expected to strengthen its technical capability in the global market. They have done a collaboration with ABB wherein they are trying to they have manufactured actually a driverless metro propulsion system which will improve the efficiency because of there will be no man-made error. The timings will be matched. I mean, it will be very efficient. That is why this is a good key global expansion. Then next one is management focus. The company is focusing on expanding into new areas like signaling and safety systems alongside its core rail system business. So as far as their con calls are concerned, they are saying 2026 is expected to be a crucial year for the execution. Here you can see the budget that has been deployed by Union Budget from the Union Budget 26-27, wherein you can see a record capital outlay for rail modernization. So what they want to do is they want to strengthen the connectivity and enhance passenger safety and modernizing the infrastructure sector and expanding the freight networks. So as you can see, the record capital outlay is of rupees 2.78 lakh crore rupees. So here are few states actually. Maharashtra, which is having a largest budget around 23,926 crore, which is around 20x compared to what it was allotted during 2009 till 14. And there are few states under that which have, you can see the 29x, 18x. So the growth multiple is very high, the budget allotted is very high, and they want to propose different railway corridors as well for improving the rail network. So there are a very there are few high speed rail corridors that has been proposed like Delhi Varanasi, Mumbai Pune, Chennai Hyderabad, Pune Hyderabad, and etc. They want to do regional expansion. They want to do Himalayan connectivity. They want to do 100% electrification of Punjab, Haryana, and Himachal Pradesh. So this will also improve their revenue. Lastly, they have a target. I mean, India have a target of achieving 3,000 million tons freight loading with model locomotives and signaling. They want to have a dedicated freight corridor from east to west, like from Dankuni to Surat. So all of this will definitely add to Titagarh's revenue stream because Titagarh is already present in all the sectors which Indian government is proposing further. Now, what are the sectoral tailwinds and what are the growth drivers for Titagarh? So, Indian Railways is doing modernization. India want to massively focus on rolling stock modernization. They want to transition towards high speed and semi high speed trains. They want to do electrification and propulsion upgrades. As we have already seen, they want to electrify Punjab, Haryana, that region. So, this is also a good growth driver. So there is a sustained demand for wagons, passenger coaches, and propulsion systems. So this is a good growth driver for Titagarh to dive in. The next one is metro rail expansion. There is a rapid metro network expansion is happening across every tier 1, tier 2 cities right now, and government is already focusing on urban mobility solutions that has been provided to tier 1, tier 2 cities. There is also a long-term replacement and maintenance cycle. So once Titagarh is not limited to product delivery, they are also into products maintenance and services also. So this is generating an alternative stream for the revenue. So there is a higher margin in metro coach opportunity with multi-year visibility. Then there is a growth driver in maritime and shipbuilding revival as well. So India wants to be a builder's navy, not a buyer's navy. So India want to do everything in India only. That means indigenization of all the things. They are rising focus on domestic shipbuilding capability. They are doing developments under coastal and inland waterways. So revenue diversification beyond railways is reducing actually the concentration risk. Infrastructure-led capex cycle is there, which is one of the growth drivers. As railways is remaining a policy priority, as we can see, a good amount of chunk has been proposed by Indian government for modernization of railways. So this is a good growth driver. They have strong budgetary allocations to transport infrastructure and long-term structural demand is there in visibility. So in short, Titagarh is strategically positioned at intersection of rail modernization, urban mobility, and defense indigenization. Everything is aligned directly with India's multi-year infrastructure capex cycle. Now, what is the role of Titagarh in all of this? So we will see here what is the market share for Titagarh which it can address. So as we have seen, Indian Railway rolling stock market is there, and the TAM for that is around 30,000 to 35,000 crore annually. So Titagarh actually can target around 15 to 20% of this rolling stock market in India over the next 3 to 5 years. Uh, Government is actually investing heavily in dedicated freight corridors, metro urban rail, high speed corridors, and electrification and modernization. And already Titagarh is working in all of the domain because it is already among the top 5 wagon manufacturers. It is benefiting from long term freight corridor contracts, and it is already expanding its metro and passenger portfolio because Titagarh has already worked with different metro projects that has been deployed like Pune, Bangalore Metro, Ahmedabad Metro, and all of that. So Titagarh can have a good amount of share from this railway rolling stock market. The next one is railway components and subsystem market, wherein there is a good amount of requirement of wheels, HVAC system, propulsion parts, and we have already seen that Titagarh have formed a JV which is working in manufacturing of these products. So the TAM for this area or this market is around 5,000 to 8,000 crore per year, and Titagarh can have around 15 to 25% in key components. Next, uh, defense and shipbuilding market. That is a high growth vertical. Sorry. High growth vertical market potential, wherein government defense outlay is increasing every year. Make in India push is there for naval and coast guard vessels. So the market size for that is around 30,000 to 50,000 crore over the next decade. And potential address share for Titagarh is around 3,000 to 5,000 crore per annum. There is also urban metro coach market wherein metro coach and other train sets demand is around 8,000 to 12,000 crore. This is the industry outlook. And Titagarh can have around 2,000 to 3,000 crore per year in a metro and passenger rolling stock because Titagarh has access to European tech via its JV with Pharma. Its subsidiary with Pharma. Then there are JV capabilities for propulsion and integrated systems, and there is a strong execution credential which is associated with Titagarh. So addressable revenue potential by FY29 is around 5,000 to 8,000 crore annually, which can be addressed by Titagarh. Yeah. This is the order book of Titagarh. This was there in their latest con call, which was happened last in February 2026. So as you can see, the contribution to order book is of different segments, not just one segment. Like they are not into just wagon manufacturing. So there are different business units that are contributing to the order book. So freight rail systems is having contribution of around 3,000 crores. Passenger rail system is having contribution around 10,000 crores, and defense and bridges around 38 crores. So in all total, the around 14,000 crores is the contribution to order book. Next, the shipbuilding and maritime systems is around 500 crores, and the order book for their different JVs, like JV with RKFL, the order book is of 6,300 crores. The order book for BAIL JV with Titagarh is around 7,000 crores. So a good order book of around 27,000 crore, 755. Around 28,000 crore order book is already there present with Titagarh. That means you can imagine the growth of the company from this point onwards. So these are the strategic growth levers for Titagarh Rail Systems. Like there is a boom in rolling stock. There are freight wagon growth is done currently because India also want to reach the target of transporting 3,000 metric tons of freight. Then electrification and locomotive systems. So India's railway electrification push increasing the demand for EMUs, propulsion systems, traction motors, and regenerative braking technologies, where Titagarh is already working in this segment. Then advanced signaling and track system, station modernization, and passenger infrastructure. This is one of the sector wherein Titagarh is not working, but that's fine because it is a part of trail network. That is why I have added this point over here. Then urban mobility and multimodal transport. Uh, Growth in metro rail system and integration with city transport network across tier 1 and tier 2 cities is also happening, and they also want to expand their export to international players also. So these are few major updates that has happened with Titagarh, wherein they have got a license for wagon leasing companies. So they are not just limited to wagon manufacturing; they can also lease the wagons to different players and generate an alternative revenue stream. So the next is shipbuilding and maritime systems. As a company, they have formed as a subsidiary. They have formed, and which is actually a sorry. Hello, can you hear me? Am I audible?
Yeah.
Yeah, yeah. So they are also venturing into shipbuilding and maritime systems with the help of Titagarh Naval Systems. The company has also entered into an agreement with ABB to develop TCMS for 25 kilowatt driverless metro and transfer of manufacturing and converters and traction motors under the Make in India policy and to the government of India. They have also done a contract for 750-watt metro systems ride with the agreement signed with ABB in 2023. That means they are covering all the wattages that are required for driverless metro trains. So this is one of the good points. TRSL has successfully developed the propulsion system for EMU trains for supply to ICF Chennai. And as far as Vande Bharat train is concerned, right now there are 160 Vande Bharat trains that are running, but they plan to operate around 800 train sets by 2030. This is a key milestone. This is a indigenously built stainless steel driverless made in India train set for Ahmedabad, which was inaugurated at Uttarpara facility. So this you can see that there was Shri Bhupendra Bhai Patel, Honorable Chief Minister of Gujarat, who have inaugurated. And here you can see this is Mr. Umesh Chaudhary, Vice Chairman and Managing Director of Titagarh. So this is a good milestone that they have achieved. Now there are different opportunities that are in pipeline for metro projects. There are these are different lines that has been proposed for metros, and currently 23 cities in country have operational metro and rapid transit system with a target to reach around 50 cities in the next few years. So this is a good point wherein Titagarh can go into. Next, there is an opportunity in pipeline, which is MRVC tender. Here you can see on the screen that the details of this tender actually, wherein they need the MRVC need train configuration of around 12, 15, and 18 AC cars, Vande Bharat suburban rakes, actually stainless steel, and the maintenance period is for 35 years. So this is a good project, and TRSL is proactively strengthening its operational and technical capabilities to support the execution of such a large scale project. So till now they have not got the project, but they are applying for this project, and the current deadline for bid of submission is around 16th of April 2026. So this is the update on rail wheel project. So the JV that has been formed with RKFL, this is the update for that. Titagarh actually holds 49% stake in the company, in the JV actually. And this will be the second largest Asia's manufacturing plant in India to produce around 228,000 forged wheels per annum. So Titagarh will use those wheels, as well as it will be capable of exporting those wheels to other players as well. So the total project cost is estimated around 2,000 crore, which is being funded through a mix of debt and equity. This project is at Chennai, Tamil Nadu, and the construction work at site is progressing as per the schedule. So the trial run for this is expected to begin by March 2026. So they are going to commence the project in 2026. So as I already told you, Jupiter Wagon is one of the peer to Titagarh rail systems. So why I prefer Titagarh rail systems over Jupiter Wagon? So you can see that if valued at similar P, if both have similar P or EV or EBITDA, Titagarh may deserve a valuation premium because it has high diversification, because there are different verticals wherein Titagarh is working. There is structural metro growth that has been happening with Titagarh. There is defense optionality as well, because they are venturing into defense. There is technology collaboration with European countries. Then Jupiter just may offer just pure play freight exposure because they are just into wagons. The business is simpler actually, and the potential higher operating efficiency is niche focused only. Here, Jupiter remains primarily freight focused, which makes its performance closely linked to the railway capex cycle. From an investment perspective, this reduces the revenue concentration risk and adds multiple growth drivers. Defense and shipbuilding contracts also typically offer longer execution cycles and potentially higher margins to Titagarh. So while Jupiter is focused freight play, Titagarh is evolving into a multi-vertical infrastructure engineering platform for long-term structural growth thesis with diversified sectoral tailwinds, and I would definitely prefer Titagarh rail systems over Jupiter wagon. These are the numbers, these are the fundamentals of Titagarh wagon, wherein you can see the compound sales growth for last 10 years was around 18%. For last 3 years, it is a good number, that is 38%. Compound profit growth for last 10 years is 34%. But if you see for the last 3 years, it is around 883%. Why this has increased? Because they are venturing into different domains, and the costing of products is different when it is considered. I mean, when it goes into passenger railway segments. For wagons, the price point is very less, but for passenger system, the price point is very high, and therefore the profit will be higher on that side. And because Titagarh is venturing into that domain, the compound profit growth is increasing. As you can see, the number of sales numbers which are going from 624 to 3,868. So here, the whatever numbers that we have seen on the previous slide, I try to justify those why I would prefer Titagarh over the other peers of that. So debt to equity of this company is very low, which is controlling the financial risk. Then PEG ratio is around 1.5 to 2, which I am assuming with 25% growth. There is premium, but justified for the growth visibility that has been there for Titagarh. The order book or revenue ratio is around 3.5 to 4x, which is strong revenue visibility is there for Titagarh. Then the PAT margin is around 7.4%. Generally, wagon manufacturers have a PAT around 5 to 8%, but with introduction of defense contracts, it can go up to 8 to 12%. So management acknowledged margins are currently lower due to this has happened in a recent con call, because they have told that there was, a short of wheel that has been supplied to Titagarh, and once the supply was there, but whatever wheels required, the specification that was required, that was not given. Like they required 840 diameter wheel, but they were given 1000 diameter wheel. So that was there, and that is why current numbers are not good, and management has acknowledged margins are currently lower due to metro project execution phase mix, initial ramp up cost, and higher working capital intensity as well. So why the revenue of this company can grow? Because as we have already seen, they have a good order book of around 27,000 crore, which is good for next 3 to 5 years revenue visibility. Then they are venturing into passenger rail like metro and Vande Bharat. This mix is increasing the along with the freight. Then they are venturing into maritime and shipbuilding, which is adding a new growth vertical. They are into forged wheels JV. They are into import. They are trying to import the substitution and export opportunity. They trying to export the, sorry, they are trying to venturing the export opportunity. Then there is operating leverage at higher capacity utilization. So proven execution turnaround in last 3 years that has been done with by Titagarh. That is why I would definitely prefer Titagarh over other companies. So these are different factors because of which I think PAT margin can increase because they have better revenue mix with different products. Then they have operating leverage because plant utilization, as the plant utilization increases, the fixed cost per unit or obviously decline and EBITDA margin expand. And as a result, the PAT margin also improves. They are doing backward integration with wheels JV that has been happened with RKFL. Then lower finance cost is there because debt to equity is already low. So here you can see the EBITDA, current EBITDA is around 14%, and it can strategically grow, structurally go up to 8 to 9% range. And with an optimized execution scenario, it can go to 9 to 10% possibly as well. So management is indirectly indicating margin expansion is expected as the scale is improving. The defense and propulsion shares are also increasing, and higher value added contracts are ramping up. So this is the realistic outlook that I can propose for Titagarh, wherein the PAT is increasing from 7% to 9%. So as far as the order book is concerned, I guess, and the execution capability of Titagarh is concerned, I will definitely prefer Titagarh over its peer. So here I have assumed around 40% of CAGR, and that is why the numbers are like this. So if I consider the PAT margin to be if I consider PAT margins going from 7% till 9%, the market cap is going from current 9,000 till 26,000 it can reach. So I think this is a very conservative number that I am giving you, because as we have already seen here, compounded sales growth is around 38%, and I have assumed very conservatively 40%. That is why all these number you can see, like the revenue is going from 3868 to 6519, and the PAT in crores is going from 275 till 587. So current market cap is 9,000, and conservatively I am saying it can go up to 26,000 crore. So this is a technical, actually, there is not a lot that can be seen in this chart, but the price has gone from like 16, 18 till around 1500, and it has now dipped around 700. So there is a high potential to grow from this, because there is no downside. And as the management is already told that they are working on the wheel sets problem, they are working on all the problems that they were facing, and from 2027 the revenue stream will be synchronized. So that's all from my side. um, I hope you have understood whatever I try to explain you about this business. And as Puneet already said, that not every stock at the bottom is worth buying, but when a strong business trades lower while growth accelerates, the opportunity becomes hard to ignore. So that is from my side. Any questions
Yeah.
from your side?
Hmm. Yeah,
Uh,
great, great,
I
Dipali
will
ji.
just 1 second. I will answer up to my capacity. If I don't have any answer, I will come back to you and definitely answer to you.
Sure, sure. No, I think it's an excellent presentation. First time you have done great. Overall, I think people should be um, envious about you, right? They should be
Yeah.
coming and
Thank you so
presenting.
much. Thank you so much.
Yeah. So, any questions for Dipali?
Yeah, great presentation, Deepali. So, like one question, like when will be the shipbuilding revenue start to come for the company?
Okay. As they have already said, they are working on shipbuilding and submarine. So 2026, the revenue will start. They will start the work, and around 2027, the revenue will start coming up.
Thank you. Like, what might be the expected margins of that time?
About the margins, I'm not sure about the number. I can come back to you with the answers. But about the numbers, if you say the currently they have, delivered around 35 vessels only, and they are planning to go till 300 vessels per year. So I am damn sure the numbers will be good. But what exact numbers will be there, I don't know. I can come back to you with that.
Okay, sure. Thank you. Like, that was very insightful. Thank you so much.
Yeah. Thank you so much.
So another question from Rajiv is PEG ratio. One place you have mentioned 1.25, and at one of the places it is 0.6.
Okay,
So just check that and correct it in the chat. What is the right number?
yeah, sure.
Okay.
Sure, Rajiv, I will answer your question.
Yeah. Great. So, and thanks to, I think, Suraj also. Dipali is the Suraj wife, and I think the confidence is reflecting whatever Suraj presents. This is reflecting here as well. So great.
I mean, both of you were a great help along with Pankaj Daga as well.
Yeah.
So thank you so much.
Yeah. Okay. Thank you, Dipali.
Yeah.
So we'll move to the next presenter, Gauri. So, Gauri, you can hear us?
Yes. Hi. Hello, everyone.
Hi. Yeah, you can try to see. You can share.
Yeah, just a minute. Let me know once my screen is visible.
Yes, it is.
Okay. So, hi, everyone. I'm going to present here about the Oli Technology Limited. Here we are going to start with the promoter and director of the company. So, this promoter of the company is Ajay Menon and the Dr. Suman Mian. The director of the company and the boards of the director are the Rajiv Tyagi, the Ritu Sood, Vinod Sood, and the Sunil Gupta. Here forwards, I'm taking over the business details. This company is about incorporated in 2000. So this all e-technology provides the technology based on the solutions which is related to the like the CRM developing custom AET and the IT solutions. Most of the company which is on the basis of that they are providing the Microsoft business application, intelligent clouds, automations, data engineering, and AI. The company provides ERP and CRM implementations solutions to the customers, which is spread over the 30 plus countries and the 90,000 plus projects engagement. Here are the products of the company priorly working like spread over. The first two products are currently are delivered to the customers, and another second one is in action, which is in under development, but they have concluded all the details in that. So first is travel base, which is like covering all the industries of related to the travels. Then education related of the second product is using for. Another is smart CX, which is related to the customer insight and intelligent automations, which can make the less work of the to get the seamless engagement with the customer. Then another is Befin CX, which is related to the next generation financial services, which most related to and cover the banking domain and the financial domains. So another project, fifth one is related to EPC, which is a unified solution about the CPS companies, which is including the engineering, procurements, and the construction related domain. Then extended WMS, which is their mobile application, which can be easy to handle with the inventory management solutions and the warehouse details. Afterwards is a social relay, amplify your social media and the dynamics, which can like easy to handle how to your social media account, multiple platforms easily. Then proactive, which is related to the making the business central and the business ready data management. uh, the another project which is related to cyborg, which is a business rule and the engine or for the business centrals. P2P, which is related to the digital and procurement process and bringing the suppliers to the core. That means it's easy to handle all the details at in a one platform. Other thing they are providing as a services which is more dependable on the Microsoft Dynamics, which is related to the CRM as well as the ERP related. Then they are also providing the cloud and infrastructures like Azure, migration and management details over there. Then data analytics, data engineering, and the business intelligence and analytics solutions they are providing currently. AI and automations, implementation, AI agents, co-pilots, robotics, and process automations, which is currently expandable. And the application development, they are focusing on the custom built applications and the software developments. Another thing which is the services they are providing, which is a consulting and supports base of the solution assessment, projects operations, ongoing support and services. They serve the client globally. Or main technology they are stack on, that is Microsoft Alletec technology, which is currently which is not currently disclosed about their order books figure out, which is recent 2026, which is search by my search. And then the financial performance for this company is approximately about 139 crore in first quarter of 2026 on the basis of the Microsoft business applications and the AI projects. Another thing which is related to in the details, that is a project engagements and or convert, like they are having serviced over the 900 and plus projects engagements and operates in 30 plus countries, as I have already mentioned. Then business focuses on the majorly on Microsoft Dynamics 365, Power Platforms, AI-led solutions, Azure Source Services. Recent activity on first quarter, which is like the companies reported that the Microsoft AI solutions growing faster in the market as per they are using the recent technologies or and higher education, green energy, manufacturing, expanding the new era. What I feel interested is about using the recent technologies with being partnered with the Microsoft's digital transformation, which is now currently in that high demanding, the asset high business, which is related to the good margins if it's growing further, exports oriented IT revenue, SME IT services, a high growth potential, which is considerable currently as per the market. This is the technical chart which I got from the screener. Um, Currently, it is a falling star, but in the future, when it's come to the market, it will grow. Business description, as I mentioned here, which is on the basis of that the power platform they are using, expanding over the as per the clients and the company, customers, factory, and field services, storefront, and the supply chains, patients and providers, peoples, and governments are putting place integrated operation systems on the customer relationship managements and collaboration portals over the mobile applications and enabling business draw actionable insights from the data. Here are the risk factors I can see. Uh, like business suffers and they anticipate the develop the new services and enhancing the existing services in order to keep pace rapid changes in the technology which is currently going on. Company success is completely depend upon the Microsoft technology and the solution services which can be provided by their by them only. So it's like Microsoft content, information, sales tools, documentation, branding material such as logos, resources. Microsoft offers incentives, campaign funds, and programs. Microsoft software services, products, and technology, any disruption, and our partner models. It can be impactful if the services is no longer provided by them. So that is the only risk factor I can see over the search. Then another thing is the intense competition in the market. As we can see, the AI is growing so fastly. So these are the risk factor we can consider, which can increase the more competitor in the future. Our, like, the company's global operations exposes the numerous sometimes and conflict legal and regulatory requirements. The failure to offer the customer supports timely and effectively over a period of time. And another thing which can be liable to their client is about the damaging the system's failure, disclosure, the confidential information, more data breach policies they need to focus on, which can be having the sensitive data about the clients. These are the fundamental ratios. About the PE is 10. PEG, the growth as per the zero point 0.5, which is lower when we consider about athletes, it should be 1. ROE is 22.44%. ROEC is 29%. Then the EBITDA margin is up to 18%. OPM, the sales growth, net profit is 6.18. The capex. Here are some values which I have showing currently. Uh, Next is the key competitors. About this are in the main competitor about this, the Happiest Minds, Keysolves India, Persistent System, Contforge, then Sigma, Emphasis, and Infobins Technologies currently are growing together. Then the red flags we can consider about this is like staging and revenue growth despite operating new 2 decades revenue growth. About it, this they are considering about the second quarter of this 2026 is up to 33 crores, and the lack of the monuments momentums. The high reliance of the non-competitive income is significant profits derivative from the non-core and the non-operating incomes, which is currently sustainable of the earnings. These are the sub stocks underperformance about like November 2025, which is decline over the 46% years and significantly underperforming border in IT sector. Another thing is weak growth metrics. We can consider is about the currently they are having a 350 to 360 employees and indicating the lack confidence of the business scaling. The then high concentration risk is related to the Microsoft and slow customer acquisition and new client addition in India. They are currently trying to grow up here. Then the bearish technical indicator we can consider is about the average and signal sustainable downward momentum. Limited institutional interest is like zero mutual fund holdings, and increasing the FII participation suggests a lack of confidence and from the professional investors. Projection earnings we can consider here is up to early in 2026. They are having some growing factor about the profit growth driven by itself the Microsoft AI, ERP, and CRM solutions. The companies has significant earning growth is roughly up to 30% CAGR, and over the from the past 5 years. it is expanding its data and AI practice, which is constitute about 10% of its business. There are like currently it's work going through the selling analyst due to the combination of this some factors. The company's geographical spread is more in America. Currently, it's going in India, Europe, and Middle East, Africa. It's expanding uh, from in the India currently is up to like 25%. Summary point we can conclude is our company is almost debt free. Company having a delivered profit about growth is 66.3% CAGR over for like last 5 years. Client presence across the multiple regions and which is currently growing and expanding about 46% in USA, 35% in India, 9% in Africa, and overall is 6%. Europe is 3%. My customers base is around 20 to 50 active customers is having this company. 88% repeat recurring revenue is generating over there, and almost the company's Microsoft cloud adaptation growth's dependable. New enterprises go currently is dealing, but not having the fixed details about it. Expansion in US and in Europe markets. IPO, which is listed in 2022, and partnership and acquisition is currently working over there. So thank you so much, guys.
Yeah, thank you, Gauri, for this. I think one of the key things here, the stock might be rated or it's been thrashed to this levels because of AI things.
Yeah,
I was personally holding it from long time and I exited sometime around 300, but I think the price is now taking care of almost all the bad news, and even the technically the stock is ripe for bounce. Possibly go through this, and I think it will work out well for all of us. Currently, it is in downtrend, but looks
yeah,
like we might be bottom is around the corner for all of us. So don't jump in. Try to understand the company which Gauri presented, and try to deep dive with more details at your side before doing anything further.
yeah, sure.
So yeah, so Gauri, you
Thank you.
just check from any questions on your presentation in the chat. In the interest of time, we'll move to the presentation from the next participant. So next presentation is by Shivali. You can hear us, Shivali?
Yeah, I can hear you, sir.
Okay.
I'll just share my screen. Yeah, I wanted to know if you can see my screen.
Yes, we can. Go
Okay.
ahead.
Hello, everyone. For me, this is the first time I'm presenting in ALD or any stock for that matter. So yeah, I would like to apologize beforehand if I have any mistakes in my presentation, and would be happy to take feedback. I'm presenting Medica Men Biotech, and it is a company listed both in NSE and BSE. Its market cap is around 400 crore rupees. It's a transformation story. It's a 30-year-old Indian generic drug company that received US FDA approval for an oncology injectable plant in November 2024. So in the next 30 minutes, I will try to cover what they do, what opportunity is there, what the numbers looks like, and what exactly what may go wrong. All right. So yeah, I'll move on to the next slide. Okay. So Medicamen was founded in 1993, and it spent around 25 years making generic tablets and capsules, which were sold in African markets and CIS markets. And it was a stable, low margin business. And like for last 10 years, if I see, their revenue is in the range of 100 CR to 170 CR, and it just stays there. Okay. But what changed, what interesting happened for this company is that in 2016, Shivalik Rasayan, which is an API manufacturer, took ownership of this company, and strategic shift towards regulated market began. So this company has two manufacturing sites. One is in Bhiwadi in Rajasthan, which is their older plant where they manufacture oral solids, and there is a brand new oncology injectable plant in Haridwar. So this Haridwar plant is the one which received US FDA approval in November 2024. So in FY 2025, their revenue, 70% came from export and 30% came from domestic, but this was mostly from their Bhiwadi plant. And the parent company Shivalik provides partial API supply chain security. So though the exact molecules they supply are still not publicly disclosed. So yeah, so I just wanted to add few, like in the slide I have not mentioned, and I'm not sure if everybody is aware of like how this US FDA thing works, right? So when we say a company or a plant got US FDA approval, basically the US government or FDA has inspected and approved their Medicaments Haridwar factory, which basically means without this they legally cannot sell their drugs in US. So this is a huge milestone, and most small Indian companies don't have it. Okay, but does that mean does that mean that they can sell every drug which they manufacture in US? That's not right. So for that, they need something called as ANDA. ANDA is abbreviated New Drug Application, and that is required. Like that has to be filed for every drug which they manufacture, which they want to sell in US market, right? So and like till now, they have filed that ANDA for one of their drugs, and typically it takes like the approval takes 3 to 5 years from when they first file. I'll move on to the next slide. Any questions here? Do let me know or do post in the chat, please.
Yeah, you can continue.
Okay. Okay, so this timeline basically shows the 3 decades of evolution with one clear inflection point. So 2016 was the point when Shivalik Rasayan acquired control, bought the API manufacturing capability, brought the API manufacturing capability into the group. So, and September 2024, they saw EU GMP certification for Bhiwadi plant, and yeah, that was confirmed by the BSE filing. And in November 2024, they got the US FDA approval for the Haridwar plant, specifically for the Botte zombie injectable line. So the Haridwar, so in the Bhiwadi plant, as I mentioned, they manufacture only the oral medicines, whereas in the Haridwar plant, they manufacture all the injectables. And these injectables are specifically for cancer treatment, like they're all like oncology drugs. And one of them specific, Botte is the one for which they have filed that ANDA. Okay. Okay. But again, as I said, because they have filed for this for Botte zombie doesn't mean they will get it. They will get the approval for all their drugs. Another thing which happened in Feb 2025, there was a 10-year US distribution agreement which was signed. There in BSC filings, we can see they have declared it, but they have not mentioned who the counterparty is. So this is still not clear that who the like with whom they have filed this 10-year distribution agreement. So we have to wait and see like how this plays up. Okay, I'll move to the next slide. Okay. So now talking about the promoters and the management team. So Rahul Bishnoi is the chairman in Medicamen, right? He's also CMD of Shivalik Rasayan. He's a CA, and architect of this transformation, you can call him. So yeah, he is the main person behind the transformation strategy, right? Then Rajesh Madan is the CEO. He has spent 9 years here. He's a gold medalist from Delhi University, and he is the one who takes care of day-to-day execution. Then you'll see that promoter holding is around 40%. In that 40%, so this Growell name which I have mentioned, now they don't have any holdings here. Shivalik is the one which has 40% holding. Right, 40% seems less, but again we have to remember that Shivalik Rasayan is the one. Uh, Shivalik Rasayan is an API manufacturer, right? So if Medicamen can get their APIs from Shivalik itself, they don't like most of these pharma companies get their APIs from Chinese companies, right? But because they can get from Shivalik, they don't have any dependency on China. So that is a big plus. But then again, it's not very clear. Like Shivalik does not supply API for all their medicines. So that's one thing. Like that is not very clear that for which all medicines will they supply, or in future also will they be able to supply for everything. But yes, it does play a very important role that they are able to get their APIs from Shivalik instead of relying on China. Okay, so that was about promoter holding. There is no pledge. Then, yeah, in April 2025, they did one pref allotment, and at 530 rupees, they they did a pref to Veralogics from South Africa and Ginnerup from Denmark. Okay, and that kind of gave them around 45 crores cash, and they also receive Shivalik Rasayan also receive warrants worth up to 35 CR. But again, that is just a commitment, right? Like that 35 CR is yet to come. That was also around some 500 plus. 500 plus was the amount at which was the price at which they gave the warrants. Okay. Any questions here? Else I'll move to the next slide. Okay. Okay. So this slide basically shows the 6 macro forces which are basically working in favor of Medicamen. So global oncology drug spending was around $223 billion in 2023, and it is projected to reach $409 billion by 2028. So this is IQVIA data. This is an American company which basically uh, collects all this data from all the pharma companies, and the companies actually pay them for getting all the research, for getting the research data. So yeah, from their this is from their data. So so the data they basically say that in like by 2028, this would have doubled. The global oncology drugs market would have doubled. Does that mean that is it all applicable to Medicamen? That's not true. But it just shows the scope of how big the market space is. So US market alone is around 72 to $104 billion, and it is expected to grow 11% annually. And oncology is the fastest growing pharma segment globally today. So yeah, that was one. Then the second point was that in Union Budget 2026, 10,000 crores were allocated over 5 years for biologic and biosimilar manufacturing. And US FDA approved oncology manufacturers like Medicamen are direct beneficiaries of that. That's the second. Third is this oncology generics is supposed to be a very high margin business, at least in the initial years, if no other competitor is making the same generics. I am not sure if everybody is aware of the concept of generics. I will tell a little bit about that. So basically, say some some brand is making, brand came up with a particular medicine, right? So they will kind of patent it for 20 years, and they will sell it at a very high price and all that, right? But after 20 years, anybody can make it and sell it. So this when anybody can make it and sell it is called generics. And these generics are priced way lesser than the branded medicine. And so because they work in the same way in which the branded ones work, there is a lot of demand for generics. It's just that there's a lot of competition too. But then how is Medicamen interesting, right? So we like as we keep talking, we'll just keep covering those points. So yeah, that. Then okay. So yeah, so one very important thing is like any company which is entering the generic market, they have to be kind of among the first few which enter the generic market. And as the time goes, so initially, like if no one else is making, their margins can be up to 40 to 50%. But every year it keeps decreasing and they can compress to 20 to 30%. Okay, so that's that. Then India is now supplying 20 to 22% of US generic drugs by volume. Indian manufacturers with US FDA approval have structural cost advantages, and regulatory acceptance of Indian quality is right now at all-time high. So, okay. Shivalik Rasayan also holds US FDA approval for its API facility at Dahej, Gujarat. So this vertical integration is a protection against Chinese API supply chain volatility. And yeah, so that. And then Indian government has also introduced some PLI schemes where for every complex generic drug, they provide a 6 to 7% incentive on incremental sales. So Medicamen's oncology injectables qualify for this, and this improves their cost competitiveness versus their global peers. Okay. Okay, I'll move to the next slide. So this is the SWOT analysis. Okay, so what are the strengths, right? I mean, the biggest strengths are, again, the approvals. Getting these approvals is not easy, US FDA approvals and EU GMP approval. EU GMP approval they got for their Rajasthan plant and this one, US FDA for their Haridwar plant. Getting this is not easy, and this is the biggest trigger which can lead to a transformation. Their balance sheet is really clean. Their debt to equity ratio is only 0.13. They have zero promoter pledge. But then their weaknesses are also real, right? Revenue has right now been flat for last 5 years, and their PAT has also declined from 15 crores to 6 crores. But then why did the PAT decline? PAT declined because they are investing in building their Haridwar plant, and that costs money, right? So PAT has declined because of the cost incurred, and not because of any other reason. Okay, so and the biggest threat to them is yeah. So today they have the US FDA approval. If something happens to that approval, right, or if they get any warning letter, which has basically happened with in the past with Wockhardt or I think with Dr. Reddy's too. So that can be that can actually be an existential threat for this thesis. So yeah. Another thing is Dr. Reddy's and NATCO already have bortezomib approvals. So it's not that Medicamen is the first one which is entering this bortezomib generic space. But the idea is that because they right now, because they have filed that ANDA for bortezomib, they have the US FDA approval. there is a good chance that for their future drugs also they will be able to get approval and they will be able to file for ANDA. Okay. Okay, so yeah, that's that. I'll move to the next slide. I think I already covered. The generic drug price erodes 5 to 15% annually. So that risk is also there. Um, so yeah, I think I have been pointing out the risk a lot more than the opportunity, but then few things which we need to really see, right? Like I have put all the competitors here in the slide, right? So if you look at the market cap, we are looking at Natco at 14,000, Shilpa Medicare at 4,800, Gufic Biosciences 3,200, Dr. Reddy's 85,000, and Medicamen is like 407 crore, right? So it's really small. Okay, so at this size, we won't find any company which has this approval who is actually going in this generic space, and so that's why if they can make it work, if they can really execute, the opportunity is big, and yeah, the opportunity is big. So, yeah, that's the thing. So, Medicamen is not really competing with all these giants. It's about, so their strategy is basically niche molecules which are too small for, say, NATCO, right? Like they can continue dealing in the bigger spaces, but the spaces which they are not dealing with, those are the areas where Medicamen clearly has a big opportunity. Another thing is, uh, so Natco basically took like 10 to 15 years to build their US business, and Medicamen has now just started. So, yeah, it is like we need to see how the execution goes and how things pan out for them. Again, here on this slide, you can see that their PAT margin is very less, right, compared to everybody. But this PAT margin is looking less because, again, because of their Haridwar plant cost. They were investing in that. That's why their PAT margin is looking less. So yeah. Okay. Any questions? Okay. Okay. So who now regarding their clientele and product pipeline? The anchor client today for them is Mission Pharma of Denmark. They have a long-standing relationship with them. They distribute to African tenders of approximately 80 to 90 crore revenue annually through them. And on the ANDA pipeline, bortezomib is the only ANDA filed. And yeah, I want to be like direct about the market size, right? So the total US generic bortezomib market space is only $6.5 million. But bortezomib is proof of concept, not a revenue game changer. So the real price is there are two other generics which they are into, right? Oh, that is oxaliplatin, and where the US generic market is actually 150 to 200 million dollars. So that's a big opportunity space, but the ANDA for that has not yet been filed. That ANDA for that has not been filed yet, meaning realistic US revenue from oxaliplatin can come uh, at the earliest from FY 29 or FY 30, not before that. Okay. Okay. So another thing is like that Feb 2025 10-year US distribution agreement is also significant. But we don't know who's the counterparty involved. So like we do not exactly know which products it covers and all. So we have to kind of just take a guess there, like, how it can pan out. Okay. Okay. I'll go to the next slide. Okay. As I said, here, so revenues and profit, if we just remove the capex which they have done for the Haridwar plant, it shows a very little growth, right? In fact, it doesn't show much of growth, and probably these slides we should ignore, right? Where we are seeing that PAT is declining or EPS is declining. All of it is again because of Haridwar cost, because of yeah. So that is so I think even though it shows the degrowth here, but that should not be considered because it's because of that Haridwar plant again. So I'll move to the next slide. Okay. So this slide covers a risk that here we can see working capital days, right? How long money is tied up before it returns as cash. So we see it has risen from 110 days in FY22 to 140 days. And this is because African, like they are dealing with African government, right? And they, African government lenders, right? So African government is paying them slower. And so that has been an issue for them. And again, yeah, so that has been an issue for them. And in future, at least it seems like this revenue can uh, kind of even decrease because they want to focus more on the oncology drugs than their oral drugs, except for the European market where they have now got a new approval, uh, new approval for the solid drugs. Okay, so yeah, that's that. Then again, here also almost every trailing metric looks poor here right now, and PE is at 57 times, ROE is at 4.5%, operating margin is at 8%. So all reflecting a company paying for an asset that has not yet generated returns, and that's how it is right now. They're investing in their Haridwar plant, but they have not yet made money out of it. So it really depends on how they execute, if they are able to make money out of it, and yeah, only then these numbers can improve. Okay, so. Yes. So we see here that in Q3 FY26, the revenue was 47 crores, right, which is up 4% year on year, and like it's in a positive direction, though the growth is not very high, and their net profit fell again because of Haridwar fixed costs continuing to rise, continuing hitting the P&L without matching revenue. And Q4 FY25 near zero profit appears to have been the peak pain point. FY26 quarter shows gradual stabilization. And the single most important thing to watch in every future quarterly result is whether Haridwar oncology plant is mentioned as contributing to revenue or not. And that first mention is the signal that the thesis has begun to execute. So this one is basically a transformation story. So we really need to see at what point it starts playing, and that would be the point which will be most interesting, right? Like, so it has its trigger points ready, but it has, yeah, it is yet to show up. Yeah. So this slide basically shows that if Haridwar plant works, what is the upside like, right? So the plant's theoretical maximum revenue is estimated at around 300 to 350 CR. And this was not disclosed in any, this is not there in any complete disclosed number. So I have covered here three scenarios where in FY26, assuming that 20% utilization happens of the plant, and which will give it nearly 60 to 70 CR Haridwar revenue. And yes, I have put 20 with assuming 20% utilization, I have put 60 to 70 CR as the Haridwar revenue. In FY27, I have assumed say 50% of the space Haridwar plant is utilized. That would mean 150 to 175 CR revenue. And in FY FY28, I have assumed like 70% utilization, and which would basically mean 220 to 260 CR of revenue. But then again, these are all assumptions. If we see that their future revenues is confirming to these numbers, then these are the probable EBITDA margins which we can expect. And basically, the moment we see Haridwar revenue showing up and their drugs going for further ANDAs, that would be the trigger point for this company. Okay. So, okay. I think this point I have already covered that their African revenue, we are expecting that it will decrease, and but we still expect their revenue to increase because of again the Haridwar plant, and also because of the approval they got for the European market for Bhiwadi plant, right? But again, that revenue will show up in FY27. So one point again, which I want to bring up here is right that bortezomib is the first oncologist injectable for which they have applied for ANDA file, and its market is not that big. But at the same time, for oxaliplatin and carboplatin, oxaliplatin is a drug. It's for colon cancers, right? And carboplatin is for respiratory can, respiration related cancers and all, right? So these two drugs, their market space is apparently much bigger, and the moment if they get ANDA approval for that, those will be the triggers for this company where its revenue can go up much higher, and the the target market space for these two drugs is way more bigger than what it is for bortezomib, which is a injectable for blood cancer, basically. Okay. We see, so when this news for approval came up, the price kind of went up to, I think, 540 or 570, I think. And since then, the price has been going down, and now it's near, I think it's near 290 now, and that's where the support also is. And right now, it's in oversold zone, and yeah, right now it's in oversold zone, and yeah. What I feel is for this company, we should really wait for some more. We should wait for execution from Haridwar plant to show up, and only then really go for investing in it, because it has happened in with the competitors that their approvals were cancelled and all. So even though it's a big deal, we should not go ahead till the time we actually see things on paper, revenue on paper. Okay. Okay, I think I have covered these points already. Yep. This also I have covered. That's it. Yeah, that's all I have. Thank you.
Yeah, great, Shivali. I think you have tried to cover maximum things, and one of the good points you have highlighted is when to start looking to buy on this kind of a company. We have been discussing Shivalik Rasayan, we have discussed Natco Pharma in this ALD forums, and of course, because the triggers are not there, they are not moving. And I think Sanjay ji is there already. He has put some comments as well on the Shivalik. So Sanjay ji, you want to comment anything on
Yeah,
the
hi.
presentation?
Hi. Great presentation on Medicamen. Just a couple of things that I put out in the chat anyway. I have been to the plant. fantastic plant at Bhiwadi. Total US standards and everything's in place. Also, like I said, Pharmadansia, the people from South Africa, who's put in about 9% in the pref. They also bought the pref at 530. They are actually about 30% of the business in South Africa is over the counter. The remaining is government thing. And these guys are among the biggest distributors in South Africa. They are working on getting all the products that they want registered. South Africa, along with Zimbabwe and Ethiopia. Ethiopia is again the market that Medicamen exports to in government contracts. They are the three toughest markets and most regulated markets in Africa. In Ethiopia, in fact, the government tenders that Medicamen participates in, basically the goods are going in their own brand. It's not like in a generic brand. It's going in Medicamen's brand. So yes, being pharma, things get delayed a couple of quarters. So a couple of quarters really is not a big thing in the pharma. If we can see, something like a new one molecule, just put it into another orbit. So even the Verologics and Genera, they're basically the same company that's based out of. So I think one is the person's personal capital, his personal company, his personal this for investment. The other is the company, and they are again a Denmark-based pharma company that has again given them molecules to develop. So there is a lot of things in the pipeline. One molecule, two molecules will really hit it. Also, the right way to do is if you can track export data, right? So if you see smaller packages of things moving, especially because once they buy the first small trial batch or they take the first batch goes for approval, it goes through a stability process. So it normally takes about 6-8 months to 1 year to get the approvals, even after it goes to the buyer. So a lot of things are in process. I think it's a great presentation. She's probably covered all the spots. And next month, or I think April is when the promoters' warrants also due. So that money will also come in. So yeah, just hoping for good times. And, I think this is a great level to start nibbling and buying. Obviously, the markets, nobody knows when the real bottom is, but it seems a great play, at least from this level. Thanks, Epuniji.
Yeah, thank you, Sanjay ji. Yeah,
Thank you,
any
Sanjay ji.
questions for Shivali from any other participants? I think two key things to watch, as you told. One is warrants, second is the plant utilization from Haridwar. I think these are the key trigger factors to start looking at it. So yeah, great effort, Shivali ji, from making the presentation, sharing it, the thoughts.
Thank you.
Thank you.
Thank you. So we should also be looking for their ANDA for the other ones also, right? Like bortezomib will not make it really that big a difference, right? Unless they file for ANDA for other two drugs. At least that's what I was thinking. Like bortezomib market space itself doesn't look that big, and the market space looks big only for, at least based on my understanding, it looks big only for oxaliplatin and carboplatin. And unless and from the date of filing for ANDA, it takes around 3 to 5 years. So
Yeah.
till the point they file for this ANDA, at least I wasn't sure that if we should will tracking the revenue of Haridwar plant help unless the ANDA for these two is filed.
See, that's the beauty of studying a business, right? Sometimes we all get the other side of the business and some other peers' business and what some other products which we should start looking at it, and that will help us in our investing journey also at the same time. So I think you are right from that perspective, Shivali.
Okay, thank you.
Yeah, okay. Thanks a lot for your presentation. Thanks. So we'll move to the last presentation of the day, and Superstar is back, right, Amar? You're able to hear us, Amar? You're on mute.
Yeah, sorry, I was speaking on mute. I don't know about the Superstar part. One eye I have on the clock. That is where I am.
Okay.
Yeah. Just let me do this. Let me know when you can see my screen.
We can see that. You can
Okay.
start. Go ahead.
So when I'm presenting, that screen kind of gets distorted, but I'm assuming everything is good. So I will go ahead with my presentation. So like I said, today I'll be presenting on Onesource specialty pharma. It's a pharma company again, and there will be some loose hidden dots connection to Shaili when I had presented it about like 2 ALD back. Why I say that is because GLP-1 is the major trigger right now for Onesource also. And as I cover Onesource deeply going ahead, I will venture more onto it and reflect more on it as to why GLP-1 is a big trigger for Onesource. So roughly speaking, this is how I'm going to base my whole presentation. Now this will be the flow where the first box, like if you look at it, I consider today Onesource to be a mispriced opportunity. When I say mispriced opportunity, why is that? Because in around 1 year, not even 1 year, less than 1 year, it has fallen from all-time high of 2,200 rupees to almost near 1,000 rupees sometime in Feb. Feb is where it kind of bottomed out. And from Feb till now, till date, which is hardly 1 month, we are seeing some green shoots appearing where the price has started picking up. And when I say started picking up, between Feb to March, 1 month, it has almost been 30% up. The runway is far bigger, much more higher, and that is where I'm presenting Onesource today. So then on the second box, we'll be decoding about the business. We'll be talking more in detail as to what Onesource is all about and where we are seeing the triggers and all. Third one, I kind of already alluded to. GLP-1 is engine where I'm focusing on. Then we focus on to the financials, and as is the flow, we will also talk about more risk and if there are risks, what are the mitigation factor which Onesource is trying to put in place. And on the final side, we will come to the valuation aspect of it. When I say valuation today, if you look at it, means if first look at the PE and any investor, not trader, mind you, investor, they will get freaked out because it's some 500 odd PE, which is unheard of. But then price earning, when I talk about PE, it is price earning, and the earnings are very depressed right now. And I'll go into the reasons why they are depressed. Us and when the earnings improve, we will see all the financial ratios improving. So we have to not look at what the current scenario is, what the current financial ratios are. We need to look at down the line, 2 years down the line, 3 years down the line, where it is going to be. And based on that, looking at that forward valuations, we make our break our thesis. Right? Moving on to the next slide. So this is a very broad level. I kind of like wanted to give an overview of what the business is all about. As Puneet is going to share this presentation, I'm not going to speak about each data points onto the each slide because me being me, I have tried to cram as much information as I could get on each of the screen. But looking at the time factor too, I will kind of like briefly highlight only the salient highlighted points only. And when you get the presentation, you can go more into detail. When I present my thesis, my expectation is if somebody likes this, they also break their head on it, and then they come up with the pros and cons, share in the group, and then we get that conversation going. This is the whole purpose of this presentation. So coming to Onesource, it came into being somewhere in 2007. I think it was June, and it came, initially its name was in Bio Pro Pharma. It is part of the Strides level, I think. So it got renamed in 2014, and then finally in 2025, it got demerged from Strides, and it was IPO'd. It's a demerger story basically, but 2025 when it got demerged, it got 8,500 crores in cash infusion. So that was the good point where they, with that cash, they kind of brought that down their debt levels. So if we look at it, mota around 19-20 साल का company already है. And when I talk about Strides and other stuff, then Arun Kumar is the CEO who is he's a veteran in the pharma industry, right? But then some of these decisions, if you look at it, he views more as a venture capitalist rather than a CEO of a pharma company, which he is in a way. So his decisions most of the times are a bit radical. But then in the past, when we look at it, those have come to fruition. So the hope is there, the optimism is there. Some of these slides, like some where you can look at it, there will be something negative and all. I will cover this in the further slides and when I come to it. So from a bird's eye overview kind of thing, this is how the business is going to look like. There are four major pillars for Onesource. On the right hand side, if you look at it, there I have kind of listed it. So biologics and specialty oral dose is one pillar. There is the complex injectable part. Then there is a drug device combination part. When I say drug device combination, what do I mean? It is it's a part of the fill finish process. What do we mean by fill finish process? Onesource as a business, what it does is it takes all the NCs or NBs or like any kind of biologics and those kind of uh, solutions. It might be API formulation. Then it kind of like packages into a container. It can be an auto injector injection. It can be injection, highly sterile injection, those kind of thing. But it takes the whole process end to end in the sense it gets the contract, it works on the formulation. Formulation doesn't necessarily mean they have to form it. They can get it outsourced from someone. They can also get the auto injectors or injections outsourced from someone. But their major task is like integrate them, get into a particular final shape. And from their doorstep to the end client doorstep, they are the one who are responsible for this whole packaging and transportation of the finished product to the client side. That is the fill finish part, and which is also combination of the drug device combination, DDC, which we call. And DDC is the crown jewel right on it. We will spend a bit more time on the later slides on this one. But this is where the whole thesis is. This is where the old tailwinds as well as the triggers are. If you look at it on the down below, there is a strategic Bangalore hub where they have 5 manufacturing plants. The good thing about this is all the 5 manufacturing plants are US FDA certified, and there has been no NCs in the history of Onesource. So that is a very good thing. So they are on the good side of the FDA. Apart from Bangalore, now they are coming up with another plant in Vadodara. It was basically a part of an acquisition, which is Steriscience India location, which is Vadodara they took it. The other part which they acquired was Steriscience ka Poland wala part. Why is that strategic and key acquisition? Because it opens up Europe and more so because after the UFTA, which has been signed and all. So they get a presence there. First thing is they get a presence in foothold into the European market. If the manufacturing plant in Europe itself, the acceptability is more. Second thing is from a business continuity plan perspective, also the geographic diversification always helps. So those are the things which you need to be keeping in mind. I will move on to the next slide. So this was the, like I said, 4 business pillars. On the left hand side, you can see the current, like what is the situation, what is the contribution of the revenue from each pillar. And going forward 3 years down the line, FY28. Why am I focusing on 3 years down the line? Because 3 साल के बाद तो management को भी visibility नहीं. So 3 years is what we can kind of more or less थोड़ा gut feel के साथ में कि हाँ इतना तो estimate कर सकते हैं based on the material information available to us. So we look at this FY28 as throughout in my thesis, FY28 is the one which we are looking for because that is where management also has kind of given concrete guidance of. But as I said, GLP-1 focus, which is the DDC part, currently is 25%, and it is scaling up to be almost going to be 50%. Here I have said 45%, but it's a range 45 to 50% or a bit more. And this is a high margin thing. When I say high margin thing, all things falling in place correctly, everything working out like a serendipity, margins can go as high as 40%. And that scaling from 25 to 45% focus gives the focus of the management, high margin area, and where the demand is, that is where they are focusing on and scaling up. When I say scaling up, from a cartridge perspective, if you look at it, today we are at 60 million. By FY28, they are looking to scale it up to 220 million cartridges, which is phenomenal because from 60 to 228, if I look at it, it's almost 4x, right? That also kind of gives the confidence the management has on the upcoming demand and the business, and that is also being reflected in the order book. So biologics is another player where we have got a steady 20% margin, and this is an upcoming field. Us and when they gain traction on it, the margins here also will be high. So DDC and biologics is where the company is moving towards. Whereas if I look at the bottom two business segment, one is the sterile injectables and the other is soft gelatin capsules. They are the current bread and butter for the company. Means they are the cash cows where the business is earning from, and this cash is being invested into the upcoming two major business areas. So this is mota, this is how we cover this, right? I thought when I was doing the deep dive on this business that we need to focus on this one critical aspect of it. One critical aspect is the company Onesource is moving away from the MSA to the CSA part. So when I say that, what does it mean and all? So MSA is more onto the development sort of side of things. So if you remember ALD6 में मैंने जब Natco Pharma cover किया था, तो I spent a good 10-15 minutes on the pharma whole supply chain and all. Today I'm not going to go there because it kind of takes up time, but people can always go to Puneet's YouTube video channel and look for Natco Pharma. That will kind of give you a fair enough idea on the whole thing, how the pharma things works and what are the different processes and the timelines along with it. So when we talk about a NCE or NBE, that is where the initial stage, even before the molecule gets approved and becomes sanctioned for the commercial approach, there is a humongous time which the innovator has to spend on it. And that is where MSA comes into play. This is the pre-approval kind of thing. What is the downside of it? The downside of the MSA is it's a new molecule, right? And the success rate is not very high. There are like high casualties there. तो ये हो सकता है कि कंपनी ने 3-4 साल लगा दिया along with the innovator and then the molecule doesn't get at the last moment on the first trial, second, third trial somewhere. If there are NCs that comes up, they have to go back to the board and redo the whole thing. So there is an element of risk over there. When we come to the CSA side is where this is approval is already there for the drugs. For example, GLP-1, we know it's a huge success globally. It is already in the market for 2 years now. And it's a runaway success. तो यहाँ पे अभी वो मेरे पास risk नहीं है कि my molecule can get rejected or it will not come into big, it will not get production. So that risk goes away. And because that risk goes away, MSA I'm looking more as a development side of thing, and CSA I'm looking more as a execution kind of thing. And Onesource has a very clear focus now that they are, from their perspective, some of the FMSAs, they are kind of like outright denying, saying we will not take on new FMSAs. We are focused on the CSA, and this is where the business is going to be built in. That approach is very clear. Moving on to the next slide. Remember in the second slide, I said the first box itself was that today Onesource is a mispriced asset. Why do I say that? It's a mispriced asset because if you look at this whole thing, the diagram over there, it's a kind of funnel thing, and here it is getting choked, and the water, the whole supply kind of gets choked. What is choking this supply? This is the DDSA part and the GLP-1 related thing I'm saying. And if you look at it here we see that there is a regulatory launch delay. So regulatory launch delay क्या है? अब ये GLP-1 just previous presentation, Shivali kind of mentioned about generics, right? तो GLP-1 innovator लेके आया, 2 साल का उनके पास uninterrupted run था. But then as of 26 across the world, the patent is being expiry hit हो रहा है. When the patent expiry hits, what happens? The generic player comes into play and they flood the market with a cheaper option. When I say cheaper, it's a relative word. Innovator जब उनके पास free hand था तो वो लोग समझो $10,000 में बेच दिया. एक injection kind of goes for that. But when the generic player come into play, since उन्होंने उतना टाइम इनोवेशन में डाला नहीं है, उतना पेन लिया नहीं है, उतना उनका खर्चा हुआ नहीं है, तो instead of 10,000 they will kind of bring it out to a fraction of that cost. It can be as low as $1,000 or $800 or something that sort of. But then generics player, when they hit the market, for each country, they have to fight with the regulatory authority bodies over there and get that approval from there to launch. today what has happened is somewhere in March, not even March, like the previous quarter, the Onesource was expecting. Onesource is just the fill finish kind of supplier, right? So it is working very closely with Dr. Reddy's. Dr. Reddy is the generics player for the GLP-1 in Canada, and they had asked for approval from Canada, and Canadian authorities have kind of delayed that approval. That approval is not very forthcoming, and the reason being provided is they have, at the very last moment when they were thinking that this is a done deal and will get the approval, the Canadian authorities, which is an FDA equivalent kind of US FDA equivalent kind of regulatory body, they have asked for more documentation. So this documentation, once it gets thrown into Dr. Reddy's code, they will have to prepare those documentations, proofs and all, then resubmit their approval for the approval process, and it kind of takes its own time. It is not a very fast process by design. So this is where the approval has not been forthcoming, but remember that this is just a deferral. It is not a denial. तो डिनाइल नहीं है तो क्या हुआ, डिफरल अगर कर रहा है तो आज नहीं आएगा तो एक क्वार्टर दो क्वार्टर डाउन द लाइन आना ही है. That is first thing which we have to know. So right now we are facing bottlenecks in the Canada. India में भी March 2026 में the patent got expired and the generics got approval for that. Natco Pharma already has an approval. Dr. Reddy has got an approval on that, and there are many other generic players who have got approval for India. And this whole process will be replicated across countries, and there are around 60 odd countries which will be opening up for the GLP-1 generic. That is where the whole thesis lies. The demand is there. Only thing is get the approval and get it start executing so the revenue starts flowing. And that is why I call it mispriced asset, because I think the market is not giving the full credence to Onesource. They are still treating it as a normal commoditized CDMO business kind of thing, where they were focusing initially on the soft gel and the complex injection. What we need to do and see and acknowledge the fact that GLP-1 is going to be a big trigger, biologics is going to be the second big trigger, and these are there, they are going to come. At the worst, what will happen? It might take 2 quarters, say. 2 quarters is a long time, but it has to come and it will come. Why I am so confident? Because when I did the deep dive on Onesource, the way they are restructuring, they are moving away from the MSA. They are वो उनका bread and butter है, but there are certain clients जहाँ पे margin कम है या जहाँ पे revenue नहीं है, they are kind of like stopping over there and saying नहीं, we will not be able to take, and they are more focusing on the CSA, commercial supply agreement, which is the part for the GLP-1 drugs. And today the situation is that CSA also has been kind of sold out for the next 2-3 years. When I say sold out, the capacity what Onesource can produce, it has already logged in around 25 plus generics clients. And these clients also know what is going ahead. For example, within a quarter or two, there are going to be 60 countries which are opening up. They need credible companies who can fulfill that demand. And Onesource is in that sweet spot. And because of that, it is in that sweet spot. It is also kind of like negotiating the contracts. That why am I saying that? One thing is, see, Dr. Reddy is the company, is the partner for Onesource, specifically for Canada for GLP-1. अब डॉक्टर रेड्डी को एक रोड ब्लॉक हिट हो गया कि अप्रूवल नहीं मिल रहा है. There in Onesource has renegotiated the contract with Dr. Reddy saying कि I can understand this happens. We will wait for you to get approval. But for me, for waiting for that period, I have already invested in that infrastructure. I have already hired FTs and all, and that is hitting my top line, bottom line. I don't need to be compensated that, but then there has to be something else which you can give me. What is those things which Dr. Reddy can give? First thing is they are going into long-term contracts now. जो contract 2-3 साल का होता था, now they are going for a decade-long contract. So अगर decade-long contract मेरा sign हो रहा है तो what happens? I get a decade का visibility कि this is going to be my pipeline. I can put my force in a better way and with the assured returns which are going to come. That is the first part. Second, some of the partners of Onesource, since they see that the demand coming up and they are not getting too many players who can fulfill that demand, they have agreed to fulfill partial capex for Onesource. So यहाँ पे ऐसा हो रहा है कि Onesource का partners लोग आगे का जब होगा उसका वो लोग एडवांस जैसा लेके कैपेक्स वन सोर्स को दे रहे हैं, वन सोर्स इज यूजिंग दैट. सो इट डजंट हैव टू काइंड ऑफ लाइक इक्विटी डाइल्यूशन नहीं करना है, डेप्ट नहीं लेना है. Client itself is giving cash advance to them, and that is being used for the capex and all. That is such a great story because तुम्हारा तो negative working ये हो गया, because you are getting client money in advance and you kind of build your capability and execute when things fall in place. So this part, if in the center, if you look at it, this is the current choking point, and because of this choking point, the financial ratios are being hit because earnings तुम्हारा इवोपरेट हो गया है. सेकंड थिंग, तुम्हारा एफटी हायर हो गया, इंफ्रास्ट्रक्चर हायर बन गया है, जहां इट टेक्स अ कॉस्ट, राइट? So this is where the PE optically is very huge. The financial ratios are all screwed up right now. But then have the vision of looking 2 quarter, 3 quarter down the line. अच्छे result आएंगे. That is what we need to focus on. This is all there is to this particular slide. Moving on to the next slide. So here we talk about the balance sheet. I talked about it, right? Bottom box, if I look at it, this is the 2025 IPO when it got demerged from Strides, and they got 8,755 crores in their books. So that has hold them in good start. So balance sheet में कोई stress नहीं है फिलहाल तो. If I even look at the DE, debt to equity, it is 0.22, which is very good for this size company. When I say this size, this is almost like 16,000 crore company today, Onesource. But then by 28, if I look at it, I will come to that in the next slide. But since I'm talking about it, management has already guided, they had initially guided by 28, they will be doing 400 million ka revenue. And in the last to last quarter, when the results came out, they upped it by 25%. 25% से revenue guidance उन्होंने 28 का बढ़ा दिया. 400 million से they said it is going to be 500 million. 500 million बोलेगा तो it is coming out to around 4,600 crores or something. आज मेरे पास 1,600 crore है. 1,600 से अगर मैं 4,600 जा रहा हूँ, तो that itself is almost like 3 to 4x, 3.5x हो जाता है, right? And the revenue is growing at like some 36 odd percentage, and profit तो थोड़ा उससे ज्यादा pace में है. तो that comes to around 39 crores now. मोटा मोटा बोलना ये है कि in spite of all these negative things, in spite of all those regulatory hangups के approval आया नहीं है, Onesource is in a much better place, and that is where Feb और March में देखेगा तो somebody realize that किसी के सिर पे नारियल गिरा, where the stock has run up 30%, and much more better things to come ahead. In this slide, again, continuing on that balance sheet part, management में one of the con calls में they said कि our goal kind of stated, they have put a ceiling कि मेरा net debt by EBITDA अगर मैं देखूंगा तो it has to be below 1.5x, and this is what we will adhere to, and this is what we are going to do it. My gut feel here is 1.5 वो लोग इतना confidently बोले हैं, but it can easily go towards 2. Why? Because once the regulatory approvals start coming into play, approval मिलने चालू हो जाएगा and the execution stage start, they will be swamped, and when they are swamped, they need to increase their capacity because whatever they have envisioned now, my gut feel is the demand is going to be much more than that. If the अगर धंधा सामने है, so they will invest and they will try to get that business also, right? So this 1.5 stated by the management can go to 2 max. But still, since it's a high margin business and high revenue business, this is a good thing for Onesource. And another thing which I want to highlight is their self-confessed goal is by FY28, they want to be debt free, which I think it will happen because अगर 500 million का guidance देके अगर उन्होंने वो achieve कर लिया, and my feeling is they might overachieve it, but being on the conservative side की 500 नहीं भी achieve किया, 450 भी कर लिया, it is still 3x from what today it is, right? And then it's a high margin business. So when the cash flow starts improving, obviously the debt has to come down. And I totally agree with the management where they are shooting for 28 to be the debt-free year. I have kind of like spoken about it, so I will put 2 seconds for this slide. Not going to speak much on over here, but basically it's the trend which is going to go this way. And FY28 का अगर मेरा 500 million का target है और वो अगर achieve हो रहा है, तो this everything falls in place. Things the other financial ratio will also fall in place, and this is how it will look. One thing which on this box I would like to mention is 23 and 24. There were like negative revenues, and the stock underperformed, right? Why? One of the bigger trigger was there is a failed Sputnik vaccine no COVID vaccine का time पे रशिया से जो आया था, right? So there things fell through, didn't work out the way they had envisioned, and I will cover this also in a risk. Because of that, there is a case overhang on Onesource, जहाँ पे स्पुतनिक वालों ने उन पे केस किया हुआ है. Management is thinking that that is not going to be a big deal and they are not going to get caught into that, but we never know. So that is one of the risks we will mention as and when I reach the risk wala slide. On the second box here, if you see, Steriscience का acquisition है. When I say Steriscience का acquisition, this was in two locations, India में वडोदरा में और Europe में Poland में. Why is this strategic? Because you get foothold into the manufacturing CDMO plant in Europe. Europe open हो जाता है. And India में you kind of diversify from Bangalore. Bangalore में ही पांचों plant थे which are all US FDA approved. Now they get in Vadodara also. So domestically also geographical diversification हो गया. Second thing, they paid pennies to the pound because this was very ऐसा suppressed valuations में they did both of these acquisitions. So this was a very good acquisitions. And because of that, what they are getting is they are getting a working plant जहाँ पे उनका sterile injection और इसका manufacturing होगा. And it is fungible. When I say fungible, what do I mean? They are focused today. Steriscience is more focused on sterile injections and those kind of things. But that can be, when I say fungible, it can be upgraded to fulfill the GLP-1 demand also. So GLP-1 का जो fill finish वाला product का full process and cycle है, that can be done on the Poland plant too. Last में एक रेड में दिख रहा है आपको non dividend, but if it's a growth story and it's more kind of a turnaround and mispriced asset kind of story, so dividends will not be forthcoming immediately. Once the situation improves, the company starts executing and they start good cash flows coming in. That is where we can hope for the dividends. Right now, they don't have a history of dividends, and immediately, at least for a year or year and a half, I don't see that coming. I'll slightly kind of move away from that flow and focus here on the leadership. I kind of briefly spoke about Arun Kumar. He is a rockstar founder, chairperson in a pharma. He has, uska history dekhoge to he has very merger and acquisition, he is very active. And that's why I had mentioned that he is more of a venture capitalist guy rather than a pharma CEO. But then at least he has got a Midas touch where when he is touching things and all, he kind of restructures in a way where he has the vision to imagine big things and then the execution power also to take it to completion and fulfillment, which bodes well for Onesource also. So this is just the shareholding pattern kind of thing. And what happens is today, if you look at it, screener में भी देखोगे तो promoter का 30% ही दिख रहा है. But because this Steriscience acquisition on the Poland and India, it was more of a equity share का swap deal में था. Because of that, this 29% of management shareholding, it will go up to 40 plus. 40 plus हो जाएगा. It will be more like 43 to 45% हो जाएगा because they are also spending money over there, and that is how it will be because they already have a stake in that Steriscience and all, right? So this automatically goes up by to 43%. This is another good point in favor of Onesource as a thesis, right? Not going to spend much time over there, but then remember I told you Onesource ka initial bread and butter was more into the soft gels and injections and more onto the NCE and NBE. NCE is like new commercial entity and NBE is new biological entity. So this is the pre-approval wala phase. The thing is, if you are involved with the innovator right from the start, from the NCE and NBE stage, you are a very sticky supplier for the innovator. Why is that? Because FDA से जब अप्रूवल लेता है तो FDA का अप्रूवल पूरा प्रोसेस का भी होता है एंड उसका सप्लायर का भी होता है. अगर आपको अप्रूवल मिल गया उसके बाद में सप्लाई चेंज करना इतना इजी नहीं है, बिकॉज यू हैव टू अगेन गो फ्रॉम द नॉट फुल फ्लेज बट देन certainly time consuming approval process. So switching cost, that's why it is rated very high. 10 में से 9 score मिला है. Brand and compliance again, like I said, बैंगलोर का 5 यूनिट है उनके पास में, एंड पूरा हिस्ट्री में 19 years का हिस्ट्री में they have never got an NC. ऑब्जर्वेशन भी मिनिमली है, जो अराउंड 50 ऑड इंस्पेक्शन हुआ है, उससे ज्यादा ही है बल्कि. Everything they have passed with flying colors. So that, and remember, when it is not a typical pharma company where the US FDA is kind of like uh, auditing them and then giving the approvals. Onesource is more into the sterile environment where it comes with sterile injections and those kind of stuff. This is more stringent, and passing that with flying colors is actually a feather in the cap for Onesource. So brand and compliance, obviously they get 8 of 10. Pricing power, because they are sticky, they have the pricing power also. तो अगर उनका raw material में कुछ price में change हो रहा है तो it becomes a pass through. Client will take that because client, the innovator, when they are looking at the final product, the finished product, one source का cost share of that will be minimal. So that really doesn't trouble them much. Network efforts we have given low because at this point of time, which we need to still see that story kind of like rolling out. But when I look from an innovator perspective and the whole approval cycle kind of thing, it's a different ball game altogether, right? Now, if I go to the CSA commercial supply agreement sort of, the story changes and we need to focus more on कि वहाँ पे networking effect हो सकता है क्या, हो सकता है तो क्या होगा बोल के. This is a developing thing. Before, the way their business was, network effect तो उतना ज्यादा chances नहीं था. When I say network effect, it's a data mining kind of thing. कि एक क्लाइंट के पास गया, मैंने उसका ये सॉल्व किया, तो देन आई काइंड ऑफ लाइक लुक एट ए further business within the same client and see if I can do that also. So that is where it is getting a low score, but then there is a scope of improvement on that one. This is what we need to look at a bit more into detail. So some parts I have already mentioned. Like I said, I have planned as much information I could have into this slide. So I will let you guys read once you get the presentation from Puneet. But then some of the strategic, if you look at it, the revenue recognition delay, but then it is nothing to do with the capability or manufacturing process of Onesource. It's a regulatory thing. It's not in their hands. And there is a innovator or the generics manufacturer who is in between. It's the job of the generic manufacturer to get that approval and get the execution started. So like I said, there will be a delay, bound hai wo, because you are going at like different around the world, around 60 odd countries, you are going and getting approval from each and every regulatory from there. So there will be teething pain. There will be places where you will get some delays on the approvals, but then eventually it will come. So it is just recognizing the fact that it's a delay, not an denial. That's what we have to look at it. Fixed cost overhead and EBITDA, today it is facing brunt of that, right? The price is reflecting in the price. अगर वो नहीं होता तो आज के डेट पे 1000 रुपया 1500 रुपए में वन सोर्स मिलना नहीं था, because its capability is much more than that. Why it is getting? Because looking at the runway, they have already started investing into the hiring FTEs. Last quarter में they hired 300 FTEs just for the GLP-1 drug. तो 300 FTEs उन्होंने हायर किया है, उनका इंफ्रास्ट्रक्चर उन्होंने रिवैम्प करके उसके लिए गियर किया है. All this is there and the regulatory approval is not coming. So it is a cost which has coming into the books. There is no revenue. That's why it's an overhead as of now. When the execution starts happening, everything gets kind of like evened out. GLP-1 में they have around 25 odd customers. That is a mitigation factor, because what happens is currently अगर मैं देखूंगा तो उनका top 5 customer itself has almost 40% contribution to their top line and bottom line. And so that risk is mitigated. They have gone in consultation with other generics manufacturer and all. And today, just for plain GLP-1, they have around 25 odd customers who have been signed in. So that's a mitigation factor which we are looking at. For now, this is what I had wanted to highlight on this slide. Moving on to the next slide. This is a SWOT analysis. SWOT analysis mein, it's a rehash of like what we have kind of told, right, till now. End-to-end CDMO specialization, what do I mean? अगर आप नया molecule ला रहे हो तो they have the capability where the innovator can approach them and they can handhold them and partner with them till the time the approval comes. After the approval, when the time comes for commercialization, they also have the fill finish project, DDC, and the sterile injection plant and all. That's why it says it is whole end to end, right from the initiation stage to the commercialization stage, and then production करके and the client के doorstep पे लेके जाके ship करना, transport करना. All that is being provided by Onesource. Why is it a big asset for Onesource? Because it becomes one vendor the innovator or the generic manufacturer has to coordinate with, right? So that's a huge point for them. In spite of all the noise today, even if I look at it, मेरा EBITDA margin expansions, which I'm looking at is 28% के आसपास में है, and it is projected to go towards 40%, inch towards 40% of FY28. Arun Kumar as a veteran leader, I have already spoken about. Some of the things which I look at on the threat side, or like if you can say the threat side में है कि this 1,121 crore legal arbitration. So there are like two arbitration cases which are them. One is the Sputnik one, which we already referred to, and this is the Singapore arbitration में है. This is the Prestige Biopharma का claim है. So there are these two overhangs which can come out as a threat if they come to fruition where they lose the case. They have to pay. It will hit the bottom line. So that is one aspect we have to look at it. Being a pharma company, US FDA audit findings is always going to be a threat, because if it goes downhill, it can really go downhill and the production has to stop. One good thing about this is 20 years ka history mein, they have not even got one NC. So that is one good thing which we need to look at it. Another threat which can come in is, see, generics, जब generic player आता है, they have to bring down the cost of the medicine. That is their USP of saying कि this is my business, right? $10,000 का जो medicine है, I'm going to sell you for 1,800 or something like that. For that, they have to cut corners. So when I say cut corners, not in the way that it will affect their business and all, but then they will pit their one manufacturer with another manufacturer and try to go with the lowest cost provider. So competition is a intensive competition globally. That becomes a real scenario when the generics come into play. And then since we are talking about 60 odd countries, so it is an export story. And since it's an export story, the currency fluctuations will obviously be another of the threat. And the hedging and other stuff are there as mitigation factor, which they will take care of. What do I talk about? In the opportunities, we already talked about, like they have order book is huge. They are booked out for 3 years. On the MSA side, they are denying competitor clients or outright saying that they will not be able to take more contracts. In fact, now in the CSA side also, CSA is the commercial supplier agreement kind of for the GLP-1. There also, their projection for the next 3 years, that is being sold out into. Since that is being sold out into, that is where they could do those negotiations with the partners and get some favorable deals. So this is what I wanted to cover on the SWOT analysis part. This is just a projection which I have given. This you have to take with a lot of, not even pinch of salt, I would say. Thoda leap of faith hai idhar. But then also it's some kind of an educated guess based on like what are the projection, what are the order books, what are we looking at it. Like I said, February somewhere around the price was more like towards 1,000. एक महीने में from 1,000 it has jumped up to almost like 1,440. 1,480 was the last price I think it was. So बेस केस में अगर मैं देखूंगा कि एग्जीक्यूशन डिले और हो गया, अक्रॉस कंट्रीज में डिले हो रहा है, और जो रेवेन्यू उनका प्रोजेक्शन था 500 मिलियन, उन्होंने अपवर्ड गाइडेंस दिया था, वो नहीं होता है. इट कम्स टू 400 मिलियन एंड मार्जिन इज 32%. In those cases, we are saying कि EPS will be around 80. Multiple अगर मैंने 18 का भी दिया, because it's a setback, right? What they had claimed, the market is not saying that. तो market अगर multiple मैंने 18 का दिया, तो I will come to a price of 1440, which bear case वाला scenario में भी I'm not losing much because the price is pretty much there. What I am losing is 3 years of time of my waiting, क्योंकि FY28 का projection देख रहा हूँ. बेस केस में क्या होगा कि गाइडेंस मीट हो गया, रेवेन्यू जो 500 मिलियन का गाइडेंस दिया था वो हो गया, एंड द मार्जिन हैज नाउ क्लॉक्ड अप टू 40%. अगर बेस केस 40% इज इजीली डुएबल, बिकॉज आज के डेट में भी मार्जिन उनका हाई है, एंड looking at the demand supply mismatch on the global side, right, on the GLP-1, this seems to be doable, and biologics again an upcoming thing which is a high margin business. So 40% मार्जिन हो सकता है. वो केस में क्या हो जाएगा, EPS will come to 95. मल्टीपल अगर मैंने 25 का दिया तो इट विल कम टू 2375. 2375 इज द बेस केस. नाउ कमिंग टू द बुल केस, एंड हियर आई एम स्टिल बीइंग कंजर्वेटिव. बुल केस में क्या होगा, GLP-1 का सुपर साइकिल चल गया, बिकॉज एवरी कंट्री इज हैविंग दैट डिमांड, एंड दैट डिमांड वी आर सीइंग फॉर द पास्ट 2 years. वी हैव सीन दैट डिमांड, राइट. फॉर एग्जांपल, वन ऑफ द स्टैट्स व्हिच आई सॉ इन इंडिया, जहाँ पे बोलते हैं कि लाइक हमारा बाइंग कैपेबिलिटी पर कैपिटा उतना नहीं है. ओजेम्पिक का अगर इंजेक्शन में वीकली इंजेक्शन देखता हूँ तो वो 13,000 का प्राइस है, 13,000 रुपीज फॉर ए वीक. अगर एक साल का कोर्स कर रहा हूँ तो 52 वीक मेरा मैंने वो इंजेक्शन लेना है. वीकली इंजेक्शन इज 13,000. That is because innovator was driving the price. When the generics come into play, that 30,000 might come down to 2,000, 2,500. But then price has come down. So what happens? The demand will explode and the unit economics will be favorable for the generics player, and that is where Onesource will come into play, because they are the one who are doing the fill finish aspect of it. तो अगर बुल केस में मैं देखा और मैंने देखा कि EPS मेरा 105 आ रहा है और मल्टीपल में उसको 30x का दे रहा हूँ, the price comes to 3150, which is like 2x, 2.5x from the current price. This is what we are looking at. And one thing which I want to highlight where I like this line is current price reflect the Q3 noise. What is Q3 noise? तुम्हारा धंधा धंधा नहीं आ रहा है बिकॉज रेगुलेटरी अप्रूवल नहीं आ रहा है. तुम्हारे खर्चे बढ़ गए बट रेवेन्यू नहीं आ रहा. बट दैट इज जस्ट ए नॉइस, क्योंकि तुम्हारा कैपेसिटी बिल्डअप हो गया है, तुम्हारा FTE हायर हो गया है. You have the capacity, capability. You are just waiting for the approval. Once approval gets, execution starts, money starts flowing in, revenue starts flowing. So I still think the risk reward point of view से देखेगा तो this is very strong. This is my projection when I look at it. And like I said, 3150 after 3 years in FY28, I'm still thinking from a conservative in the bull side. I wouldn't be surprised if it goes beyond 4, all things falling in place. Summarize करना हो तो what am I looking at? First thing is the right sector. A safe way to play the GLP-1 shortage. What is the safe way? वो एक क्लीशे डायलॉग है ना, whenever we have heard so much time in investing, कि जब गोल्ड रश हुआ था तो गोल्ड माइनर्स वर नॉट द वन हु मेड द मनी. The pick and shovels were the guy who made the money, because they were selling pick and shovels and getting money even before the gold was mined. And that is what is happening with the GLP-1 story. GLP-1 is a very loose analogy to the gold rush, जहाँ पे इनोवेटर एली लिली हो गया या जेनेरिक्स प्लेयर लाइक डॉक्टर रेड्डी या नेटको हो गया, वो लोग जाके बेचेंगे. जब उनको बेचेगा तब रेवेन्यू आएगा. बट अगर उनको अप्रूवल मिल गया है और वन सोर्स ने फिल फिनिश करके पैकेजिंग कर लिया कि दिस इज माय कंटेनर, दिस इज माय ऑटो इंजेक्टर, दिस इज माय इंजेक्शन, दिस इज द डोज व्हिच गोज इनटू इट, इट पैकेजेस एवरीथिंग स्टेराइल एनवायरनमेंट में ट्रांसपोर्ट टू द क्लाइंट. द मोमेंट दे ट्रांसपोर्ट दे गेट पेड, राइट. So this is the typical pick and shovel play which you are looking at, and the sector is booming. So that is why right sector on the first part. The more part, there is very high barriers in sterile injections. Like I said, normal pharma company का अगर तुम्हारा stringency अगर समझो 50 होगा तो sterile environment में मुझे करना है तो it will be 70 or 80, much more stringent. The audits will be much more stringent because वहाँ पे failure नहीं हो सकता. Failure rate is like 0.001, 10,000 or something like that. Third box, right price. Why is it the right price? Because we are playing the time arbitrage. हम लोग रुके हैं कि हो सकता है कि worst case scenario में approval, the regulatory approval, it can come 2 quarter, 3 quarter down the line. So price will be suppressed during that time. It might even fall. But eventually तो आना है. जब आएगा तो धंधा बढ़ेगा. जब financial ratios improve होंगे तो price बढ़ेगा. So this is a time arbitrage. You get into the lower valuations right now, patiently play that. When if you are an investor, frankly, अगर आप trader नहीं हो, investor नहीं हो, 2-3 quarters is nothing, right? As an investor, we always talk about long term as a 5-year story, 10-year story. जो आज का डेट में I think I kind of challenge that कि 5 or 10 year story हर business हो नहीं सकता. But 2-3 quarter तो हम wait कर सकते हैं if we have our thesis right and the execution comes into play. So that's why today we are getting the right price. We will get into the lower suppressed valuations right time, mispriced allocation business है right now. But then risk reward इतना favorable है कि it can easily go 3x 4x if the one source executes things rightly. So that was my thesis and my presentation in that. Open to questions. Did I make you guys sleep or what?
Good. Yes, a good presentation.
So is it Shelly not better than this one source right now?
दोनों अलग धंधे में है.
No, but again, in terms of opportunity, because that is more like sort of solo or monopoly player, right? At least in the generic
Yeah,
side,
yeah.
right? Perception.
No, but from a fill finish perspective, if you look at it, no, इंडिया में कितने जन है जो fill finish पूरा प्रोडक्ट करके दे सकते हैं आपको? See, OneSource might outsource some of those auto injectors and injection from Shaili, but it is the one who is integrating the whole package, right? जो final तुमको जाना है कि ये injection में Shaili is only going to give you injections. It is not going to
Correct.
pre-fill it with the dose and all.
Correct.
That is what OneSource has to do. OneSource का risk कम हो रहा है because the generics manufacturer is the one who is going to go and fight for the generics approval in each country. तो वहां पे थोड़ा risk भी mitigate हो जाता है. I have presented Shaili, right? So I'm not going to say anything negative about Shaili. I still love Shaili and it is part of my PF. But then OneSource also deserves to be part of your PF because it is today the pricing is mispriced. तो वहां पे तुम्हारा किकर बहुत जल्द आएगा. Shaili का already valuation बढ़ गया है, right?
Correct.
So when I presented also that time the valuation was high only, but then I still had that faith and conviction after the deep dive that नहीं यहाँ पे पैसा तो बनेगा. वही conviction मेरे को OneSource में भी है. So I will treat them as two separate entities, but they are part of the GLP-1 वाला ecosystem and GLP-1 is the one which is currently trending. So we have to ride both of them now.
And what about the risk for the orals?
Orals वाला risk again it is something which has to come, right? कि there is no sufficient documented proof saying कि उसका efficacy क्या है. So look from that perspective, ना आप oral लोगे आपके blood stream में कब जाएगा कितना absorb होगा, that is always going to be inferior to what you are injecting because when you inject it is directly going to your bloodstream. How does the oral में खाली convenience है,
Correct.
but then efficacy will be way below what the injections are doing.
Okay, thanks.
Any other questions? Looking at the time, like if there are other questions, don't put on this chat, put on the
WhatsApp group. That is better.
WhatsApp group. So WhatsApp group, mein once I get the questions, I will definitely respond back.
Yeah. No, I think now I have to choose between OneSource or Shelly. That's how good it is.
No, I just gave the answer. You have to write both, Puneet. You don't choose.
Okay.
And if you have not taken Sally yet, I am slightly offended right now.
It has to come to the right price for me. Possible. I missed
Yeah.
around 1500, 1600 that zone. It came. I missed.
Yeah.
That time. Anyway. Yeah, Veena ji, you have one more question. Go ahead.
Yeah, not regarding this, like in general. Yeah, this was from morning. It was a wonderful sessions, everyone. So this week we seem, ये सब geopolitics से there we will get some chances to dip our hands in many stocks. So is there from a Nifty perspective, are you looking at some level?
So maybe I will close this session and then maybe discuss that. That is better for us.
Oh, okay.
Yeah. So any other questions for Amar before we close?
Just want to ask why pharma is Amar's favorite.
Yeah, I was
पैसा
just thinking 10 minutes back like that only.
क्योंकि पैसा उधर है ना.
अच्छा.
We are doing all this so that we get some share of that money, no? So if you go to USA, medical is the profession where the money is. Second is the insurance. Insurance is sector which I don't like. थोड़ा cheating लगता है मेरे को. So that is why focus is more on pharma.
स्लाइड्स कैसे बनाया आपने? स्लाइड्स बहुत बढ़िया बनाए.
अरे, now we have to start using leveraging AI, no? All slides of mine are from a notebook LM.
अच्छा.
Life आसान
Okay.
हो गया.
Yeah, I think Sheetal also used that.
Yeah, I saw that.
Yeah.
कोई slide थोड़ा ऐसा मतलब not on the content but the presentation similarly at least I could see because I hadn't prepared my slides, you know. So I could see that similarity there.
I tried to use it for the first time. I was maybe that comfort level is not there. Maybe next time.
Sure. Okay, I think we have come close to the close of this ALD 8.0. I think went.
I'll stop sharing my screen, Pujit.
Yeah, it's been great for all of us. 8 stocks. Almost all the stocks are at bottom. Maybe next week gives us that chance to jump into the stocks which we want next week or next to next week. I think those are the last 2 weeks. I believe personally I may go wrong, and then hopefully the market is back to where we wanted it to be. So thanks for
Right.
all the great efforts and the presentations, guys. This time I took a step back, but maybe for something bigger in the coming week. So we'll attach again for like 2-3 hours discussions.
Yeah, that would be great, Puneet.
Yeah.
And one thing which I would like to kind of repeat, I also said at the start of my presentation, when I present a stock and to give my thesis as to why I think this is a compelling option, my idea is now our group has grown, right? It is more 100 plus people who are actively like attending this presentation, looking at the presentation, hearing it. My expectation is somebody likes certain business which has been presented. They do their own deep dive. Then they come up with the pros, cons and start sharing in the group. That is what will make the group more vibrant. Second thing, it will also, how do I put it? It will make the thesis more foolproof because we are hearing diverse views. We are looking at the pros, cons, and then we kind of build up on that knowledge. That is the whole intention of this LD presentation. So I would expect people to, in the WhatsApp group, they become more participative from that perspective.
Yes. Okay, I think let's get the closing and then jump onto the Sundays. We have taken a lot of time for the Sunday of people. So let's get back to our luxury time. Thanks all for joining. We'll meet again soon. Maybe next ALD would be in a month or so. We'll be doing it faster than that.
Yeah. And before we end, I didn't get a chance. To everyone, happy Women's Day. Have a good one.
Yeah.
Thank you.
Bye.